Executive English, FX and rates to equity opens. Client ready. Welcome. In this micro lesson, you'll learn to write client-ready equity opens that translate FX and rates moves into clear equity implications. Your job is to frame stocks through the lens of currency and yields, then deliver crisp, actionable context in 1 to 2 lines. Think numbers first, impact second. Use data points plus strong verbs plus equity impact. For example, DXY plus 0.4% overnight. Exporters and EM under pressure. You'll get formulas, verb choices, and quick templates, so your morning note is tight, useful, and ready for busy clients. Use this simple flow. 1. Lead with the macro driver, usually FX or rates. 2. Quantify the move and time frame so readers can size it. Level, change, when. 3. Translate to equity impact by sector, style, or region. Who benefits, who hurts. 4. End with positioning or a watch item to guide action. Example: on USD strength, DXY plus 0.5% pre-market, we see exporters EM softer. Commodities heavy. Watch margins for euro earners into guidance. Short, neutral, and directly tradable. Tie each currency move to a clear equity read-through. Stronger USD is a headwind for exporters and EM. Foreign revenues translate lower, and dollar funding tightens. Weaker USD tends to lift commodities and cyclicals, as dollar-priced goods become more affordable. JPY-CHF strength often signals risk-off, favoring defensives and pressuring beta. EUR-GBP swings drive margins and translation effects for multinationals, costs and reported earnings shift. Keep it precise. Name the move, then specify the likely sector/style/region impact so clients can act fast. Rates shape multiples and sector leadership. Rising front end tightens financial conditions and pushes multiple compression, especially for long-duration growth. Curve steepening, long yields up versus short, often supports value and cyclicals on improved growth expectations and bank net interest margins. Curve flattening favors defensives and quality, as growth signals cool and duration gets rewarded. Real yields up put growth under pressure by raising discount rates. Long-duration tech and biotech usually lag. Always pair the signal with the equity style most sensitive to it. Open with clean connectors that frame causality. On, as, amid, with. Show cause and effect using driven by, on the back of, following. Balance confidence with hedges like we note, likely, watch, tentative. Keep tone neutral, concise, and numbers first. Example: as real yields climb, growth faces pressure. Watch software into earnings. Strong verbs: press, lift, weigh, support, extend, accelerate. Make the read energetic without adding hype. Your goal: clarity over color, precision over prose. Lead with level plus change plus horizon, so readers instantly gauge magnitude. Example: DXY plus 0.4% overnight gives direction and timing. For yields, quote, UST 10Y 4.25% plus 6 BP, or 2's 10s minus 10 BP to minus 25 BP for curve moves. Keep decimals, basis points, and timeframes consistent. Avoid jargon unless you define it once. Real yields equals nominal minus inflation expectations. Use the smallest set of numbers that conveys the move, then jump straight to the equity read-through. Precision builds trust. Brevity keeps momentum. Use these plug-and-play lines, then tailor. 1. On USD strength, plus 0.5% DXY, exporters lag. Commodities in EM soften as dollar pricing tightens conditions. 2. With the curve steepening, 2s 10s plus 1, 2 BP, cyclicals and value find support. Banks and industrials typically see better sentiment. 3. As real yields push higher, plus 8 BP, growth multiples face pressure. Defensives hold on relative earnings stability, watch software, and long-duration tech into guidance. Keep each opener tight, neutral, and immediately actionable. Remember the flow. Macro driver right pointing arrow quantify, right pointing arrow equity, read through right pointing arrow watch item. Lead with data, then state who benefits or hurts, and finish with a positioning cue. Balance confidence with hedging language when signals are mixed. For practice, draft 3 opens daily using live FX and rates, 1 on currencies, 1 on the curve, 1 on real yields. Keep each to 1 to 2 lines, numbers first, verbs strong, and implications clear. With repetition, your morning equity opens will be precise, fast, and client-ready.